Good morning, judges. My name is Javier Singh. I'm studying in grade 4D. My school name is Babam Guardian Academy School in Ajman, UAE. This is my ninth challenge on business and finance. Topic: demonstrate and explain the concept of profit and loss in trade with real life examples. Contents: what is trading? Benefits of trading. What is profit in trading with example? What is loss in trading with example? Number one, what is trading business? Trade is the voluntary exchange of goods or services between different economic actors. Since the parties are under no obligation to trade, a transaction will only occur if both parties consider it beneficial to their interests. Number two, benefits of trading. It increases a nation's global standing. It raises a nation's profitability, encourages investment in a country globally, expands products variedly, creates jobs in import and export sectors. Profit and loss. Number 3. What is the profit in trading? Profit is a term that often describes the financial gain a business receives when revenue surpasses cost and expenses. For example, a child at a lemonade stand spends 1 quarter to create 1 cup of lemonade. She then sells the drink for $2. Her profit on the cup of lemonade amounts to $1.75. Types of trading profit: investment trading profit, operation trading profit. Number 1, investment trading profits. The earnings achieved by someone who invests in short-term securities. Because of the short, less than 1 year holding period of these investments, trading profits are taxed at a higher ordinary income tax rate rather than the lower long-term capital gains that is allowed for investors that someone has held for at least 1 year. The disparity between these tax rates is substantial, so the trading profit concept is important to a person paying taxes. For example, a day trader buys securities for $1,000 and sells them for after a few hours for $1,025, resulting in a trading profit of $25. Number 2, operations trading profits. Trading profit is equivalent to earnings from operations, thus it does not include any financing related income or expenses, nor does it include any gains or losses on the sale of asset. This is a good indicator of the ability of the core operations of a business to generate a profit. For example, ABC International has revenues of $1 million, cost of goods sold of $650,000, selling and administrative expenses of $250,000, interest expense of $75,000, and a gain on the sale of assets of $10,000. The trading profit of ABC includes the interest expense and gain on asset sale, resulting in a trading profit of $100,000. Number 4. What is loss in trading? This is a trading chart. Trading loss means the amount by which the purchase amount exceeds the sale proceeds for each transaction by a claimant in an eligible security. Example: purchase amount of oil trade $92.85. Sales amount of oil trade equals to $71.85. Loss amount of oil trade equals to $71.85 minus $92.85 equals $21. Types of trading loss. Number 1. Over trading losses. Over trading refers to the excessive buying and selling of stocks by either a broker or an individual trader. Number 2. Essential losses. While trading actual patterns, essential losses are likely to occur. Number 3. Revenge losses. When a trader makes an attempt to win back the losses by making far riskier trades, it is called revenge trading. Fear, frustration, and overconfidence can all lead to revenge trading. What is the profit loss ratio? The profit loss ratio is the average profit on winning trades divided by the average loss on losing trades over a specified time period. Profit and loss ratio equals to total gain over NWT divided by total loss over NLT. NWT equals to number of winning trades, NLT equals to number of losing trades. Reference websites are CNBC, MW, Investing.com, FX Street. Thank you, judges, for giving me this wonderful challenge.